Hey Wales, good evening. Let's go over the Fibonacci retracement as well as the Fibonacci extension tools. Now, these are two of the most important tools to have in your repertoire. The reason why we use the Fibonacci retracement tool is because of the fact that there will always be dips within uptrends. So we like to use the Fibonacci retracement to essentially understand when to buy on that specific dip. So on uptrends, whenever you get price that goes up, when you get this dip, where do you typically buy? Well, how I use the Fibonacci retracement is very simple. I basically click on this tool in TradingView, Fib retracement. You can actually locate it here on the left side of the toolbar. I favorited it so it comes into my toolbox. You click on this and you click on the lowest point. If it's a candle, the lowest wick, and you bring it all the way up to the very swing high, to the top. And you project it out like this. And you can see that you'll get different types of Fibonacci ratios. Now, based on my past video, you know the main settings that I like to use is the 382, 618, 786, and a 0.88. So this is essentially what you see. So price, if it comes down here, it retraced 61.8% of this entire level. And essentially what you guys want to do is look into higher time frames and get your levels sorted, and then move into the smaller time frames to pinpoint your entry. So always start with the larger time frame. So looking at this, right, I basically am looking at where should I buy on the uptrend. Well, if it's an uptrending stock and it keeps going higher highs, higher lows, I want to buy the dip. So the first thing I want to take a look at is buying the dip around the 618. This is a very crucial level that I love to buy at, because the 618 is typically the reversal levels of majority of the stocks. And if it can keep this bullish uptrend, it'll keep going higher and higher. Sometimes price can actually come down a bit more to the 786. So this can definitely happen. So what I like to do is, I maybe stack 2 or 3 orders within this level like this. And I like to look towards the left as well at recent price action. So for instance, if there's a lot of, supports, wicks or something like this, right? I like to look left and see where can I line this up. Okay, there's a lot of wicks here like that. There's a lot of, supports here, blah, 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 blah. So that's how sort of I layer my orders. I look left, I look at the Fibonacci, and you can also, put on the moving averages, right? Like I mentioned in my past videos, I like to use the moving averages, the Fibonacci moving averages, and you can check that out in the TradingView settings video. But, you sort of create the story. You create as many confluence, as many evidence to suggest that, okay, these levels make sense to buy. So not only are you using the Fibonacci retracement, but you're using different things like support, resistances, moving averages to time a entry. So the more things that check off that says, okay, this is good, the better it is. And even the same thing on the Fib extensions, and I'll talk to you guys later about that. But this is sort of how you use the Fibonacci retracement. It's just an idea of where better buying opportunities would be on a dip. Now, if it's an extremely bullish uptrend, sometimes we just go to the 382. And you'll see this typically on wave 4s. And again, you can go into my whale courses. You'll go over sort of the wave theory. But again, you get a wave 1, 2 that comes down to the 618, 786. You get a larger uptrend, then a smaller dip for a wave 4. So this is all of a wave 1, 2, 3, 4, 5. So on the wave 4s, you want to take the retracement not from the low, but from the 2 wave and put it up like this. And typically wave 4s, again, they like to end around the 382 level. So it's a little bit riskier, to buy in at the 382. But if it's an extremely bullish, stock, it typically only goes to the 382 before it bounces higher. So keep going with the trend. Keep going with the trend. As long as the Fibonacci EMAs keeps hold of price, you want to keep going and keep buying the dips on the trend. You can also time buys using the stochastic RSI, like I mentioned in my past video. You're using, a lot of different Confluence to build up your story. So let's take a few examples. And again, my settings for the fib retracement, it's this 382, 618, 786, and a 0.88. Keep it very clean. I don't put any colors or backgrounds, right? A lot of people like to use colors. I don't use the colors too much. Prices, values, right side or left side, depending on, your aesthetics, what you want to see. But I typically keep it on the right. And font size, if you have bad eyes, you can put it larger. So this is exactly what I like to see. And let's go, for instance, to Costco. So for Costco, so you essentially want to see where the last main pivot point was. Okay, and you can see there's a few pivot points for this example. There's one down here, and there's one here, so you guys can see. So for instance, let's say we're at this one, and now it's retracing down. Where should you buy? Well, I like to stay with the higher time or the higher cycles first, so I'll take the swing lows, and I'm going to project it out to the swing highs. So boom, you can see it landed right at the 618. So you're going to buy at the 618. And not only that, it's on the moving average. So that's a beautiful confluence. And secondly, if you take a look at sort of the indicators, let's look at the stochastics. I'm pretty sure it's low. So you can line it up. Stochastics RSI is very low. So these are all sort of good confluences to tell you that, okay, that makes sense to buy at the 618. You have the Fibonacci retracement at 618. You have the moving averages hitting price on this uptrend, and you have stochastics RSI really low. So it makes sense to go in. And, from my past videos as well, you see 3 waves. 1, 2, 3. Okay, so you want to buy in 3, 7, or 11 wave sequences. So all this is sort of evidence, right? You're a lawyer, you're just gathering evidence to say that, okay, this is a slam dunk case. All right, next one is, let's say, okay, I took a pivot here. Now I want to check just to make sure from this pivot. Let's see. So if I take the fib retracement from this low to that swing high again, all right, it didn't reach exactly to the 382. But if I take it from this pivot again, it did reach the 618. So what am I going to do? I'm going to just sort of highlight these levels, right? So that's an entry that I want to keep a look at. And if I didn't know, right, I would have also looked at here at the 786. There's a lot of orders here or support on the left. So I'm going to put an order here. I'm going to put an order here. So this is sort of how I build up a possible, position. Okay, let's keep going. All right, so let's say it bounced and it's retracing now. So let's see what's going to happen, right? So this was the last swing low. So I'm going to take the fib retracement, put it towards the high. Okay, so now it did go underneath the 382. But you can see that the retracement sort of catches, very crucial levels. So it reached the 382. It's on the moving averages. It went deeper than usual. So, if I look left, I see this pivot point here. So I'm most likely going to put a stop loss underneath that level. So I wouldn't be stopped out. I would have bought at 820 because if I take a look at the stochastics, it's low as well, right? When it entered the MAs at the 382, it's really low. You can see here. So that's where I would have entered. So you can use Fibonacci retracements as a way to sort of gauge your timing. Let's go to the next pivot. So from here to the swing highs. Now this one hit the 382 perfectly. So you can see how powerful the 382 and the 618s are on uptrends. So you can see on an uptrend, hit the moving averages, hit the 382. There's a lot of good support here on the left. Okay, and you can see stochastic RSI super low when it reached the moving averages. You can see that, right? You can see that. So these are all ideas to keep using the retracement tools. Okay. So let's say price breaks below the moving averages. What should you do now? Well, I would have tried to kept going with the trend. I would have bought at the 618, but I would have been stopped out because look, it went lower. So if you're using this pivot, obviously you're going to lose the trade, and that happens. You can't win every single trade. So what do you do next? You go for the next pivot. So you try to zoom out. Okay, this looks pretty significant. These look pretty significant. This looks pretty significant. So I'm gonna keep going and see. Okay, it bounced off the 618 from that pivot. So you just want to keep going with the pivots, see what's going on, and try to build your story. Now, if price starts breaking below this time frame, right, this uptrend, now you have to go to the next bigger time frame. Let's say it's not respecting the 2 days, right? It's still breaking under, so maybe the 3-day time frame. Okay, so it's respecting the 3-day time frame. So when was the last time the 3-day time frame was significant? Maybe here. So I'm going to take all these Confluence, see what's going on. So take pivots from here as well. So yeah, I mean, like, it's respecting the 382. You're not going to get the perfect entries. So you can't just use fib retracements is what I'm saying. You can use it as good levels. But of course, if you were waiting for the 382, you would have missed this setup. It would have front ran your algo. So again, you want to use a lot of different ideas, Confluence, and try to build your story. Overall, in my opinion, if I use my strategy, I don't think I would have been able to time this entry well. Even with everything that I've used, there's no way I would have been able to time this. So I would have missed this completely. Okay, so that's probably not a great example, but that's basically how you use the Fibonacci retracement tool, guys. You use it as a way to sort of gauge where you should buy on uptrending stocks. My internet's a little bit slow. Okay. Let's go to ExxonMobil for another example for downtrends. Sorry guys, it's really laggy. All right. So ExxonMobil, you can see, goes to the weekly. You can see it's still in an uptrend, so you can use Fibonacci retracements to get entries. But now, when this breaks and starting to look bearish, how can you sort of now think that, how to enter shorts? So you basically do the opposite. Instead of going from the bottom to the high to get the entries, now you go from top to the bottom. So you can see, if I take the retracements the opposite way, from the swing high down to the swing low of this pivot, right? So let's just look at this cycle first. So from here to here, you can see price went up to the 618 on the opposite side. So now it's going to keep going down like this. Or that's the plan. So every time now price comes up, now this is the next pivot. You can see this is the next significant pivot. This is the next significant pivot. So you're going to take the fib retracement from the swing high down to the swing low. So you can see price actually rejected off the 382 or around there. And it's near the moving averages. So you can take a short here. So this is how you build up Confluence, guys. So for shorts, you just do the opposite, swing highs down to the swing lows. For uptrends, you do swing lows to the swing highs, and you sort of keep building that Confluence. This could have easily went up to the 618 as well. So it really depends, right? But you're using the 382s and the 618s as a gauge for your entries. You can put stop losses above the 786, above the 0.88, something like this, to sort of get your swing trades and day trades. So that's how you use the Fibonacci retracement tool.